studying your last two. I swim with tea when they turned in. The staring down to mute and can learn the pole that sunk he died.
This slide highlights an important practical reality of tax administration that many owner-managers and even new accountants are surprised to learn. Although tax legislation provides the legal framework, the outcome of an audit is not always identical from one auditor to another. This has been particularly true for home office expenses. Over the years, many tax professionals have observed that CRA auditors have sometimes taken different approaches when reviewing similar home office arrangements. This is what people mean when they say that CRA has been all over the map. Let's look at the examples shown on this slide. A corporate owner-manager uses part of their home as a home office. The claim is prepared and submitted to the CRA. Now imagine that 3 different auditors review that exact same arrangement. The first auditor may conclude that the allocation is reasonable and that the documentation adequately supports the claim. In that case, the home office expenses are accepted. A second auditor may not reject the claim, but instead request additional documentation. They may want to see a floor plan, measurements of the workspace, expense calculations, or other evidence supporting the allocation. The claim is still under consideration, but more information is required before a decision can be made. A third auditor may take a more critical approach. They may question whether the allocation method is reasonable. They may challenge whether the workspace was used primarily for business. Or they may ask whether certain expenses should be included at all. As a result, the same home office arrangement may receive a different level of scrutiny. This does not necessarily mean that one auditor is correct and another is wrong. Many areas of tax law involve the application of facts to general legal principles. Reasonable people can sometimes interpret the same facts differently, particularly when the legislation requires judgment rather than applying a simple mathematical formula. The flow across the bottom of the slide illustrates this concept. The facts remain the same. However, a different auditor may ask different questions. Those different questions can lead to different conclusions or different requests for supporting evidence. This is why consistency cannot always be assumed from one audit to another. For owner-managers, this means that preparing a home office claim involves more than simply performing calculations. It also involves being prepared to explain and support the methodology used. The stronger the documentation, the easier it becomes to demonstrate that the allocation is reasonable. The key takeaway from this slide is that similar home office arrangements may not always receive identical treatment during a CRA audit. Because interpretation and professional judgment can vary, owner-managers should focus on preparing well-supported, reasonable claims that can withstand careful review regardless of which auditor examines the file. Now that we've seen how different auditors can sometimes reach different conclusions, let's explore why that happens. Many people assume that every tax rule produces the same result every time. In reality, home office expenses often depend on facts, documentation, and professional judgment. That combination can naturally lead to different audit outcomes. At the center of this slide is the home office file being reviewed by a CRA auditor. The auditor is not simply looking at one number on a tax return. Instead, they are evaluating many different pieces of information before deciding whether the claim is reasonable. One of the first factors they consider is the size of the workspace. How much of the home is actually being used for business? Is the office a dedicated room? Or is it a small area within another room? The size of the workspace directly affects the percentage of home expenses that may reasonably be allocated to business use. Next, the auditor looks at documentation. Were floor plans prepared? Were measurements taken? Are calculations available to explain how the allocation percentage was determined? Strong documentation helps demonstrate that the claim was prepared carefully rather than estimated arbitrarily. The auditor also reviews supporting records. This includes receipts, invoices, utility bills, internet expenses, insurance documents, and any other records that support the amounts being claimed. Without supporting documentation, even a reasonable claim becomes much more difficult to defend. Another important consideration is the actual business use of the workspace. Is the office genuinely being used to conduct corporate business? Or is it primarily serving a personal purpose? The more clearly the space is dedicated to business activities, the stronger the overall position becomes. The auditor may also consider how frequently the workspace is used. A home office that is used regularly for managing the corporation may be viewed differently from one that is used only occasionally. Consistency of business use can strengthen the overall claim. Another key factor is the allocation method itself. How was the business use percentage calculated? Was it based on floor area? Was the method reasonable? And was it applied consistently across the various household expenses? Professional judgment also plays a role. Although the tax rules provide guidance, many home office situations involve evaluating whether the facts support a reasonable allocation. Two experienced professionals may sometimes place different emphasis on the same facts, especially when the documentation is incomplete or the circumstances are unusual. The panel on the right side of the slide summarizes the auditor's overall review process. The auditor examines the facts. They review the available evidence. They evaluate whether the allocation appears reasonable. And they determine whether sufficient supporting documents exist to justify the claim. This explains why two similar home office arrangements do not always produce identical audit results. The tax rules may be the same, but the quality of the evidence and the specific facts surrounding each case can differ significantly. The key takeaway from this slide is that home office claims are rarely evaluated on numbers alone. They are evaluated on the combination of facts, documentation, business purpose, and reasonable judgment. The stronger those elements are, the stronger and more defensible the home office claim becomes during a CRA audit. This slide brings together the practical lessons from our discussion of home office expenses and shows how experienced accountants build a strong and defensible tax position. The objective is not to guarantee that a CRA auditor will never ask questions. Instead, the objective is to ensure that every aspect of the home office claim is supported by clear evidence, reasonable calculations, and consistent documentation. At the center of the slide is the concept of a strong home office file. Think of this as the complete package of information that supports your claim. The stronger this file is, the easier it becomes to explain and defend the allocation if the CRA reviews it. Let's look at the supporting elements surrounding the shield. A floor plan is often one of the first pieces of evidence. It shows the layout of the home and clearly identifies the workspace being used for business. Next are workspace measurements. Knowing the dimensions of the office helps justify the percentage of the home that has been allocated to business use. Expense records are equally important. Utility bills, internet invoices, insurance statements, property tax bills, and other household expenses should be retained to support the amounts being allocated. Allocation calculations should also be documented. Instead of simply stating that 20% of the home is used for business, the calculation should demonstrate how that percentage was determined. Business purpose is another important factor. The file should clearly explain how the workspace is used in operating the corporation. For example, it may be used for bookkeeping, client meetings, administrative work, or business planning. Photographs of the workspace can also be helpful. They provide visual evidence that the area is genuinely being used as a home office rather than as a personal living space. Consistency is another hallmark of a strong claim. Applying the same reasonable allocation method from year to year demonstrates that the approach is systematic rather than arbitrary. A brief written explanation can further strengthen the file. This document can summarize the methodology, describe the workspace, explain the allocation process, and identify the expenses included in the calculation. Now compare that with the situation shown on the left side of the slide. When documentation is incomplete or missing, auditors naturally have more questions. Additional requests for information become more likely, and the overall audit risk increases because there is less evidence supporting the claim. On the other hand, the panel on the right shows the desired outcome. A well-organized file with complete documentation provides the auditor with a clear understanding of how the claim was prepared. That creates a much stronger position during an audit. The formula across the bottom summarizes the entire approach. Use a reasonable allocation method. Maintain complete and accurate records. Apply the same methodology consistently. Together, these elements create a stronger defense if the CRA reviews the claim. The professional tip reinforces an important point. The goal is not to eliminate every possible audit question. Even well-prepared files may receive questions from the CRA. The goal is simply to have sufficient evidence to demonstrate that the allocation is reasonable and supported by the facts. The key takeaway from this slide is that strong home office claims are built on three principles: reasonable allocations, thorough documentation, and consistent application. When those three elements come together, owner-managers are in a much stronger position to support their home office expenses during a CRA audit.